In this lesson, how to use Fibonacci extensions, the learning objectives are: you should know how to draw Fibonacci extensions, and you should know how to trade using Fibonacci extensions. Fibonacci extension levels can help establish profit targets on trend trades or alert you to when potential trend reversal areas could develop. Fibonacci extensions plot possible levels of support and resistance, just like Fibonacci retracements. Fibonacci extensions are created by looking at an initial moves and their retracements. Fibonacci extension levels are most accurate on popular and highly liquid currency pairs. They help us measure the size of the current price move compared to the previous move. The main Fibonacci numbers above are 123.6%, 138.2%, 150%, 161.8%, and 261.8%, with 100% also included. One simple way to remember these Fibonacci extension levels is by simply adding 100 to each of the standard Fibonacci levels, as you can see like we've done here. And for the 261.8 level, you add 200 to the most important Fibonacci level, the 61.8% ratio. Typically, you would use Fibonacci retracements for moves within the trend and switch to Fibonacci extensions when the price goes through the 100%. Fibonacci extension levels act as support and resistance in exactly the same way as Fibonacci retracements do. Fibonacci extensions are particularly useful for trend trading. In an uptrend, the general idea is to take profits on a long trade at a Fibonacci price extension level, since the market often finds resistance at these levels. In a downtrend, the general idea is to take profits on a short trade at the Fibonacci extension level, since the market often finds support at these levels. How do we draw Fibonacci extension levels? The Fibonacci extension tool is applied to one price move, which in turn helps predict future price movement, helping you identify where price may go to and possibly reverse. Once you have selected Fibonacci extension tools, we will need to select 3 price points to set up the tool properly. We will click a total of 3 tabs on the chart and the following price levels. The beginning of the primary move, that's number 1. 2 is the end of the primary move, and number 3 is the retracement. To apply the tool to an uptrend, click the bottom of a price move and drag the tool to the top of the price move, and then the next line you'll draw it to the low of the current retracement, or where you expect the retracement could go. For anticipating retracement levels, you can utilize the Fibonacci retracement tool. You will follow these same steps if the market is in a downtrend. Also, when you stretch the indicator, the Fibonacci levels will be plotted automatically on the price chart. The Fibonacci extension tool can be applied to any market and any time frame. The level the price stops at will vary depending on the strength of the trend. Most often we will see the price pause or reverse at 61.8 for a weaker trend, or 100 for a strong trend, or 161.8 for a very strong trend. Once the price starts to move higher, we can draw a second Fibonacci extension level. We can repeat this process, drawing a new Fibonacci extension on each new price ring. When the price reverses, we use Fibonacci extension for the emerging downtrend. You can consider entering the market at Fibonacci extensions when the price reacts. This could be a bounce or a breakout. In some cases, you will see the price clearly breaking through a Fibonacci extension level. In this case, you may consider a trade in the direction of the breakout and target the next extension level. If the price bounces from a Fibonacci extension level, price may be changing direction, so you should enter a trade opposite to the previous trend. Essentially, you would trade Fibonacci levels in a similar manner to other support and resistance levels. As a general rule, you can place your stop loss at the next level beyond the one that you're trading. In the case when this distance may be too far away from your entry, then you can simply use a swing top / bottom that is closer to your entry point. You should also set a take profit level. A take profit level could be, if you're in an uptrend, the next level higher in a Fibonacci extension level. But you should evaluate the market condition at each level and act accordingly, because you never know where the price could go. Taking into account other factors such as volatility and average daily range can help in setting logical take profit targets. The more volatile a forex pair is, the more likely it is to generate bigger moves in a fixed time period. And on the flip side, the less volatile a forex pair is, the less likely it is to generate bigger moves in a fixed time period. In conclusion, the most important Fibonacci extension levels are 123.6%, 138.2%, 150%, 161.8%, and 261.8%. A quick way to remember the Fibonacci extension levels is by taking the major Fibonacci levels, 23.6%, 38.2%, 50%, and 61.8%, and adding 100 to them. In the case of 261.8%, you're adding 200 to 61.8%. You can open trades when the price bounces off an extension level or when it breaks it. Flexibility is necessary also when determining your target. Since you never know how far the price will continue, you should always combine price action techniques with the targeted Fibonacci extension levels when choosing your exit point. You can use Fibonacci extensions in all markets and on all timeframes. It is a trend following tool and helps isolate potential profit targets for trades. A common problem when drawing Fibonacci extension levels is determining which swing low / high to start from. There is no one right way to do it, but with a lot of practice, you will make better decisions of picking swing points.